We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is returning guest Jaime Carrasco. He's a portfolio manager at Canaccord Genuity and also a forward thinker. Thanks for joining me today, Jaime.
Thanks for having me back. What a time.
Absolutely. It's always good to get your insights here. Before the call, we were talking about the main event that was the election and, the real hyperinflationary wave and populist wave that you're seeing coming here. So why don't we start by talking a little bit about the bigger picture and what you're seeing here?
Yeah, well, the first thing I would have to say is that what a year we had and what an election this was. I was right. This was the main event. But it's funny. I think we should go back to the comments I made on BNN in Canada the day before the election. I actually was asked to be on. And I said that to me, the election was more of a binary effect. Whoever, one of those two guys is going to win the election. The real picture behind that is the reset that now everybody's talking about, and I've been talking about for much longer than that I'm preparing for. And that's the monetary reset that needs to take place. Well, why is that important? Because whoever wins the U.S. election, I said, is the person that's going to negotiate with the world for that reset. Mm-hmm. My observation was that if Biden won, we are going to end up with that global system, the SDR, guided by the IMF. Versus if Trump wins, he's going to tell them to forget about that reset and he's going to go at it on his own, right? Personally, I look at it as a drama, as a tragic comedy, the whole election, but the reset to me is very important. Because I don't want a global government. I don't want to be ruled. Like, look at Canada. Look at the stupid decisions we're making in that we're going into a green economy, even though we don't have the electric capacity to participate in a green economy. And even though our true natural wealth is energy, oil, and we're just walking away from that industry and killing a province in the meantime. Anytime any individual or a country or a nation or a leader forgets about their strength and builds on the weaknesses, they don't get very far. Then that's a history lesson. And I think that's the important thing, that we are building on weaknesses in Canada from decisions are not being made by us. And so going forward, I think it's important just now to put aside the election and move on. That show is over. Like a great movie that is going to be in the back of our heads for a long time. And let's move forward and look at the consequences of what has been happening with all of this money that has been entering the system and prepare for the consequences of that, because that is definitely starting to show. And that to me is a bigger concern. And there's a lot of opportunities that are arising from that from those that can see it, right? Because money is devaluing and it's devaluing at a very fast pace. Mm-hmm. Right. Copper is a great signal of that. And we can talk a bit about copper as well, if I think it's important, right?
Before we move on to copper, Jaime, one of the things you and I were talking about was the importance of language and what history has really shown us how, language is very important to, let's say, control of systems. So we've seen the censorship recently. So share with us a couple of your thoughts around language and censorship.
A woman to that question. Because it's funny, it reminds me of a conversation I had years ago with a good buddy of mine was dating this artist who's a big feminist. She stood up for women. Well, one day we're having a supper party and she starts talking to me about the word history. She was pissed off because it was always his story, not her story. So she said, what about her story? And I said, well, history, first of all, has nothing to do with his. It's not about gender. It's a Latin term. It has nothing to do with gender. It's about the travel of time. And the changing of the words is so important because by changing words, we tend to change the way we think, right? It's about controlling the narrative. And I think, that's why it's so important. I was amazed at that prayer at the opening of the Congress this year between a man and a woman. Well, to me, that's silly because, again, a man has nothing to do with men. It has to do with God. So why is it being done? I think it's all part and parcel of controlling of a narrative, right? And that's scary. That's a scary thing because it's replaying the children of my youth, right? But within that replaying, if we forget about the political social side of the equation, because, I don't want to be re-educated in any way, shape, or form, I think it's more important to understand that it's the parallels and the same consequences of any populist society, right? Which is what we're living today. It's a complete black and white. There is no gray anymore, right? Mm-hmm. We know everything for either you're on that team or on this team, right? And it's so indicative of a populist wave and what we're going through now. And the important with those is that, and I'm talking about populist waves like in the 30s, is that they're unpredictable, right? Look at the situation where we sit today. We have a completely polarized U.S. society. Before I go forward, I'm going to say something I said a long time ago, and I think I said it on your show maybe 2 years ago. I said, look, we are living through a country-active winter or a fourth turning. This is the U.S.'s fourth. The first time, they fought a common foe. The second time, they fought each other. The third time, they fought a common foe again. That was the Germans. What are they going to do this time, right? Mm-hmm. I'm saying that because history teaches that these periods of time are very unpredictable. And from an investment perspective as investors, what I'm trying to point out is those unpredictabilities. It's not that I like one team or the other. I'm agnostic. What I'm about is about making money and making sure that I have the wealth to survive what is coming, right? The same economic conditions that have arisen in Brazil of late, in Venezuela, mm-hmm. in Brazil, in Argentina, in Latin America are replaying, which is the loss of purchasing power of the monies, which is actually during a populist wave like in the 30s, again, the net result of the policies that got us here, which is what? Too much debt, too much money printing, too much control by the banking system, right? And the loss of the middle class, the greater transfer of wealth to smaller percentages of the population, right? Those are just reflections and characteristics of resulting populist waves. It's always the same. So what do you have? You have a concentration of wealth distributed among a smaller and smaller percentage of the population and a political system, right, that control. But then you have the masses that have less and less and less. Well, then they uprise and they go for whatever choice is offered. And so everything becomes very unpredictable until everything cleanses, until after the reset. Bottom line is the reset is needed. A monetary reset that they're all talking about is needed. It's what will be the shape of that, right? So again, language and all that, those are just characteristics of a populist wave, which is just replaying. I think what's more important is, okay, as we go through a populist wave, as we go through a monetary cleansing, certain parallels always come to the fore, be it in Brazil, in Chile, and here, right? And that is the main thing that is happening is that money is devaluing, right? So that's where the concept of monetary buoyancy comes to the fore, right? And it's funny that, so let's talk about monetary buoyancy for a second, because my main portfolio is called the Special Opportunities Portfolio. And it was set up when I was the rep for Chile for Scotiabank. I was there to talk to their biggest clients, family offices, right? And institutional clients about services. How can we help in Chile? Chile was our second biggest market, but we were doing hardly any business between Chile and Canada. Well, when I got there, through the discussions, the one thing that came clear was the need by this type of client to protect from the purchasing power loss of the peso. Why? Because during the 70s and 80s, that was a very hard lesson to learn as they went through that monetary storm of the 70s and 80s. It was tough for Chile as they cleansed through all of the debts. So that was still pressing in the head. And what I set up was a portfolio design as a standalone solution to protect from the loss of purchasing power of the peso. Now, at that point, that portfolio only had gold and silver as the vehicles. Today it has blockchain because I had already begun to understand blockchain, but it wasn't part of my investment theme at that point. Now it is. Because again, it's all part and parcel of the same thing. What is happening is that, so look at Bitcoin and the performance it had last year. It's just that they added another $6 trillion throughout the year. You know, it's funny, back to the disconnect of a populist wave. Look at the whole, what they were going on about sending $600 or $2,000 to Americans, right? And that wasn't all Americans, not all 350, only the employed, the ones that are unemployed or suffering, right? Well, forget that. If you were to send $2,000 to every American, it's a drop in the bucket in the $6 trillion that have already been allowed to enter the wealthy, right? And never mind the 20 trillion that have been added, right? So again, I don't know why all of that just to appease the crowd. The real problem is all this 6 trillion that has been flashing, where that 6 trillion is seeking Bitcoin. It's seeking the blockchain, right? And that's why the blockchain is rising, because also you can't control the price of the blockchain the way you can of gold and silver through the futures market, nor of copper, which brings me back to copper again, right? Copper is signaling a very important signal, right?
Before we move on to how, let's say, you're surfing the hyperinflationary wave that you see coming, one of your recent tweets was saying that Kaplan says he's hopeful that later this year we will meet substantial progress bar for tapering QE. So do you think that's at all possible?
With Janet Yellen at the Treasury? Come on, give me a break.
Exactly.
You know? Let's look at the players.
Mm-hmm.
What's Janet Yellen's solution? Turn it on and turn it off. And I'm talking about the printing press.
It's binary.
All that, and how long have been telling us not to worry. Like, I've stopped listening to them. I don't know why people listen to the central bankers. To me, they are the problem, right? Yeah. The reality is that the only solution they have is to accelerate the money printing to a massive level, right? There's massive amounts of refinancing that's coming. A lot of this debt is rolling, right? Mm-hmm. How are they going to fund it? Where's the money going to come from? Well, no, it's going to be printed. There is no way forward to keep the ship afloat but to print more money, because there is just isn't enough money. We are at that point of the Treasury funding rollover where you don't have enough money to fund the rollover, so you need to print. From here forward, we are already beyond the end road, right? And that's why the fact that copper's breaking out, the fact that gold is not signaling what is really happening is what offers the best opportunity, because gold right now should be so much higher. Again, I go back to that 2017 clip that I keep bringing out of Terry Duffy, head of the COMEX, telling us that just because the price of copper is in at what he thought then should have been $67,000, it was trading around $1,200. People are dismissing factors that won't be dismissed forever, right? Well, in essence, what he's saying, whatever's happening right now won't be able to happen forever. And when it stops being able to be done, which is through debt, the price is going to show. And that price is much greater than the $7,000 that he thought it should have been in 2017. Well, I'll tell you what, when that occurs, the performance of my blockchain holdings last year is going to be a game in relation to what's going to be happening to those producers right now that are extremely profitable. Because, just side note, one of the beauties of the producers, their free cash flow to value is flashing buy signal of a value signal, Warren Buffett, right? It's the best buy ever in terms of how profitable they are at $1,800 gold, and never mind when they get above 5 to 6 and where it's going. They're going to be money machines, right? So by then, all of that flood of money that's chasing is going to be coming into my sector. In the meantime, though, I continue to add.
Absolutely. So do you think that there's any chance of us seeing a central bank blow up in 2021? I
think there is. And I think Max Kaiser had attuned to that. Somebody needs to blow up because there's always a weak link, right? Be it Deutsche Bank. Is it 2021? Is it 2022? I think we're getting near. I think there's too many issues with the repo. They're trying to rejig everything. We need to do something to reset these debts, because the net result of these debts are no economic growth, because we've reached the marginal utility of debt a long time ago, right? We never got the takeoff velocity that Greenspan was talking about, that 6% to pay back what we borrowed in 2008. How are we going to pay back we've gone from 175 trillion to over 250 trillion in global debt? Wake up. How is that going to be paid? Are we going to have 5 generations of debt slaves? I don't want my kids to be debt slaves. I won't be here to pay for that, right? It won't happen. On top of that, the net result of that accretion of debt is the continued demise of the middle class, the tax base, social inequality. Well, they know those results are happening. They're just not going to tell you. That's why they need to reset. What are they going to blame it on? They're going to blame it on COVID slowdown, whatever it is, blame it on Trump. It doesn't matter. But the reset has to take place. And that reset will involve the devaluation of the current money. And in that devaluation, you want buoyancy, the things that are going to save you the most. This is why central bankers aren't selling gold, right? yes, there was some sales of central bank gold last year, but I think it was Mongolia, right? They needed to, but it was picked up very quickly by other central banks, right? Because they know that they need to reset their amount of gold. And I think that's the bigger issue.
So let's move on to copper and tell us what that breakout after this 10-year bear market, what is that important signal showing us?
Good question. Now, copper is the global barometer, right? Because no matter what happens, there's a bare minimum of economic activity. So there's always a bare minimum of copper demand. And for the last 10 years, the economies haven't been growing. And I would argue that over the last year, they have not been growing. They've been decelerating even more because of COVID. Right. So if copper prices are running up now, I don't think it's because we expect the economy to pick up. I think what it's really signaling, though, is the fact that money is devaluing. And the thing with copper as a track of money devaluation is so important because you can't mess around with the futures contract. So its price is as pure as it can be because of its importance to the global economy. Now, that being the case, the fact that copper is finally breaking out, to me, is not signaling that the demand for copper is picking up, but that the devaluation of fiat currency is accelerating, especially with regards to the US dollar, right? And that's important because it means that the ship's sinking is accelerating. So copper is just rising to the top of that devaluation. And it's tracking, it's a better track of the true extent of money devaluation or inflation, which Russell Napier, which to me is one of the best, came out last March and he reversed and he said, no, the inflation has begun after being deflationary, in a deflationary stance for more than 10 years. He finally said inflation's here. So I think the tsunami is hitting us, right? And that's the tsunami that I want to ride as it hits us.
Absolutely. So why are we not seeing that same, let's say, wave starting to build or signal really showing in gold right now? And where do you think we could see gold head in 2021?
Well, I think at some point, look at last Friday, everybody was like, it's funny, now we have all of these new entrants into the gold sector that came in just last year, right? And all of a sudden last Friday, somebody sells 7,000 contracts at 3 a.m. in 15 seconds. They really wanted to maximize the market, their return, so they sell at a time when everybody's in the market so that somebody can buy their gold. No, they manipulated it down by selling the equivalent of 7,000 contracts, and I don't want to do the math, everybody can do their own math. Through that week, more than 16,000 contracts were sold, paper contracts, to kill the price, right? And you can't do that to copper, right? So I continue to say that the price of gold is not moving because it is being manipulated. Now, the importance of that manipulation, by the way, anybody that says that that's fake news, just look at the amount of money that all of the banks have been paying to settle the manipulation of gold, right? So I also think that's also coming to an end because of that. There's a lot of factors that are signaling that that's coming to an end. However, the consequences. So the consequences is that, and I said this last year, that gold from this point forward, they will only be able to control the rise, but they won't be able to bring the price down again because this manipulation has really started taking place around 2015. And those short contracts have been adding. So it's like a break that eventually will release. Going forward, I think we are seeing the emancipation of the price of gold because they really can't bring it down anymore. 7,000 contracts in the middle of the night in 2016 would have killed the price for about a month. Now it's for about hours, right? So the price is going to continue to rise and eventually it'll emancipate and break out, right? And that's when the producers really kick in. For now, what you got to have is a strategy that allows you to manage through it, right? And back to the price control, the price is going higher. And I think 2021, it's going to be much better than the beginning of 2020. We were sitting, at 1,300, I believe it was. And here we are at 1,800 now. Exactly what I said. Most people won't understand why the price is higher. What were the targets at the beginning of last year? That gold was going to be about $1,100 to $1,300. Well, we ended up at 1,900. And now finally people are saying, well, maybe we can't see over 2,000. I think the true price is much higher, not the paper price. And I'm betting that with my producers, when that occurs, I will definitely benefit, just like it did in the 30s when gold did have to reset again.
Mm-hmm. So how does silver play into that equation? And what kind of gains could we see from silver? Obviously, we know that it's much lower as a percentage from its all-time high. So how do you see silver playing into that as well?
Well, it's very easy. Gold is the big brother, and he can be beat up a little bit more than silver. Silver is the little brother that is also being manipulated down, and because it's such a limited market, it's manipulated even more, right? So the price of silver, if you look at it, it hasn't really broken out in 50 years? And it's been manipulated for that long, which means that it offers an even better opportunity because it'll have greater percentage increase, which it did in 2020. In 2020, silver took off like a bat out of hell. Most people haven't noticed that it went from, I think, $12 up to $25 now, which was an unbelievable return, and it's starting to show on the companies. The important thing is that when silver follows, it has a greater percentage increase than gold. And as a result, it's going to affect the silver companies. The leverage that some of the silver producers have will be an even better reflection on their earnings, right? So they'll have an even greater exponential move. It's the reason why within the portfolio, I have an overweight to silver producers. Now, within those silver producers, I have certain concerns, and I've been making some adjustments, placing assets in different geopolitical areas, because, again, I have 4 quadrants for my picks: geopolitics, management, research on the ground, and cost of production. And geopolitics, I think, are part of the important component of choosing those selections. But I am overweighing silver, right, within what I had a number of years ago. But I also have my gold producers. Now, what is interesting is that even now we have First Majestic that just started a dividend. All of these companies are generating quite a lot of cash flow because the cost of production is so much lower than the current prices. So if at $1,800 gold and at $25 silver, I'm getting a dividend, just wait and see what happens when gold gets above 5,000, silver follows wherever that number is going to be, call it 100. Well, a producer at $9 and a gold producer at 600 are going to be very, very profitable, right? And money will follow. So one of the things I have within the portfolio is blockchain. What I've been doing over the last year, I started with a 10% allocation at the end of 2019. And as that grew, I just kept cutting it back and buying more gold and silver producers, right? Now, everybody's like saying, oh, wow, look at what happened with blockchain. Well, what I would say is that blockchain is just reacting to all that money sitting around. Because what is it? It's high-tech managers sitting in a lot of cash that have decided, you know what, instead of sitting in cash, I might as well come in and sit on some Bitcoin.
Seems like another symptom of how much currency is being printed that wants a, let's say, quote unquote, safer place to be.
A store of safety. Correct, right? So I would highly advise that for anybody that is questioning Bitcoin, find that there was a great interview with the first tech CEO to plug I think it was $500 million of his cash into Bitcoin and how he went through the analysis of it, right? Because as you listen to this, which was done last summer when Bitcoin was, you know, in the $9,000 to $10,000 range, the interview, or when he did that purchase, he's going on about, well, I looked at gold, I looked at silver, I looked at U.S. treasuries, and then Bitcoin, right? I like gold, but it had its certain problems. Well, I got to tell you one thing. I bet you he's thinking the same thing I am since he's already done the homework. I have all these profits in Bitcoin, might as well take some out and buy some gold and put it aside, right? I'm doing the same thing, but I'm doing it with gold and silver producers or some of the explorations we paid. Everything we paid over, everything we bought over this past year was bought with profits, right? So now I'm rolling profits back into other things and adding some great either exploration or producers to the quiver of surfboards within my portfolio to ride that wave.
So, Jaime, can we talk a little bit about how you're really trying to structure that portfolio? Do you take, you know, some, let's say, 10% risk with, let's say, explorers, weight producers more so? How do you look at that?
Okay. That particular portfolio has a very small weighting in explorers, okay, because the explorers are true speculation. That portfolio is more into producers, actual miners. And it's funny because on the blockchain, I own now the biggest public miner of Bitcoin in the world, right? And let's come back to that in a second. Not a Bitcoin, but a blockchain in a second, the mining fact, because I want to give you my analogy of how I see the blockchain. And we can talk about that later. Let's keep talking with the portfolio, right? So the foundation of the portfolio is the actual producers, because the producers are the ones that have the leverage to the cost of rising commodity prices, right? So what I do, I structure a disciplined approach of having X percentage in silver producer, X percentage in copper and gold producers, and X percentage in blockchain, okay? The benefit of asset allocation decisions are the 80% of a portfolio's long-term return, because it takes away the love and hate of the whole scenario. So what I did in end of 2019, we took a big position in blockchain. And to us, it was about a 10% position within the portfolio. But then it started growing. That position returned 2,400% this year. Okay? How do we use it? Well, that 10% very quickly became 30%. Automatically, we trimmed it back. First time we trimmed right back to 10%. That profit, we rolled back into the other holdings. So if we said we wanted to have 5% allocation in Agnico, and it had gone down to 4%, we automatically bought it back up to 5% in the rolling when we do the restructuring. We did that 4 times throughout the year, where we went from 10% to 30%, then we cut it back to 10% the first time, we cut it back to 13% the second time, to 15% the third time, and now we're right back up at 30%. What's happening now, though, is that the producers are starting to move higher, so it's starting to come back a bit, and I think blockchain has leveled off. Okay? Now, that process, though, has allowed us to continue to buy more of the companies that we love that are moving, but to acquire more shares. So what it's done, it's strengthened the portfolio because now we've used our blockchain profits to strengthen the value of the producers underneath, right? Now, that portfolio on its own is also part of my equity income portfolio. The equity income portfolio, that same process, 30% of the portfolio is doing that. So it has allowed us, actually, we bought Exxon. I added my first bit of energy. For quite a long time, I was underweight energy in that other portfolio, right? And I was looking at, okay, energy's got to be at a bottom. I got to start raising my energy position. So I had energy, I got 10% of the portfolio, and it had gone down to 5%, okay? Instead of adding the companies that I have there, what I decided to do was I took a position in Exxon, and we bought 5% because the dividend was over 8%. Right. So in December, we took a huge position in Exxon, not because I have where energy's going. What I was betting was that energy's part of the portfolio. The biggest energy company in the world will always be around, no matter what happens. On top of that, they're having a massive finds of oil in Guyana, where they've replaced all of the barrels that they have, that they wrote off a couple of years ago. They're up to 9 billion barrels now. So they will be one of the most profitable oil companies in the world, no matter what happens. And I figure, you know what? We're going into this green energy experiment. Well, I don't think we've run out of energy demand yet, oil demand, so it's a good place to be. So what I did is now I went from that 5%, brought it up to 7%, and added Exxon. And how do we do it? We took money off some of our blockchain and gold section because it's gone from 30% to about 40%. And we just bought Exxon and bought some other companies with high dividends to shore up the dividends, right? And that's the benefit of asset allocation. I'm not falling in love with Bitcoin. I'm just cutting it back and trading it. But I do see the blockchain as something else, right? And I love the debate between Bitcoin and gold, but we can talk about that a little bit later.
Yeah, that's actually what I wanted to ask you about, Jaime, is because you seem to have a very open mind about blockchain and Bitcoin. So how do you see is it a both assets or is it a one versus the other? No. Okay. To understand the debate between Bitcoin and gold, one has to understand the difference between gold and currency, money and currency, right? Mm-hmm. Gold is money. The problem with gold today is that we've allowed bankers to mess around with the currency, right? And there is no control of the currency. So all of this money printing that they're doing, they're just adding money, right? I see blockchain as electronic currency, paper that they can't control, an electronic system that they can't control. So to me, when I saw Bitcoin for the first time and blockchain, I realized, wait a minute, this is the solution to gold's problem, right? That they're able to print money nilly-willy, and with that printed money also control the price of gold so that we don't see what is really happening. But it doesn't mean that real money is not important. Real money is important, right? So I see them as parallels. What I see beautiful is the fact that once this whole system implodes and we are rebuilding the system, as I think it will, because history teaches us, the same way that it imploded in the 1770s, the last time we messed around with a fiat system, the beauty is that we can rebuild it in a blockchain-based decentralized system, because I understand what a decentralized currency is about, right? So I see them as running parallel. The nice thing is that even with an electronic currency, to really reset a monetary system, you still need a peg that everybody can trust. Because I could be using Bitcoin, but the Chinese can't come out with their Chinese Bitcoin. And then the Russians come out with the Russian Bitcoin.
Well, what's the difference, right? You're able to duplicate it, but we all have one gold. In 2,000 years, Bitcoin will not be here, but the gold will. It's that constancy that offers why gold is money, right? Mm-hmm. That is the one thing that we can all trust to be there, to have as a constant unit of measurement of a monetary system, because you do need a constant unit of measurement for anything. That's a natural fact, right? Including monetary systems. And so that's why I see gold as the ultimate form of money and blockchain as the solution to gold's problem, right? So I think going forward, I'm using them both in parallel, in tandem. And another thing that's important is to understand that blockchain and internet, right? The internet is built. So think about the internet back in 1995. Now we're building this new network called blockchain, which is being built with the little coins, right? Well, it's a road that is being built. And the little coins being Bitcoin itself or Ethereum, which has a different purpose, or whichever coin you want, right? They're all being built and they're going to continue to be built going forward, right? So you can't stop that anymore. And I don't think you can stop Bitcoin either, because Bitcoin might become the black market currency. But unlike Chile, where 11 million people participating in a black market, Bitcoin can be bought by the 9 billion people. How many people are we in the world now? 7 or 8, whatever it is. You have 10% of those chasing Bitcoin, and the price is going to rise, right? So I'm not concerned about government control of Bitcoin or anything. You know, I'm a bit of a rebel. I think outside the curve, and I don't let people tell me what to think. I will use Bitcoin if I can, if I have access to it, right? And if somebody takes it for a transaction, I'll barter with Bitcoin. And I think that's going to be what's going to happen with a lot of people, that, you know, not everybody's going to listen to the governments. I'm betting that 10% or maybe 20% or even greater, whatever it is, that are not listening to their government. So I can't use Bitcoin. Well, you know, like I got to wear a mask inside. Ooh, I forgot to put it on. Sorry. They're going to use Bitcoin, right? Mm-hmm. So, yeah, no, I don't think you can stop it. And I think both of them are running in tandem. And I think gold's still the ultimate form of money and always will be. And silver.
Mm-hmm. Yeah, that was kind of something I was thinking about as you were talking about blockchain, was your opinion on these regulatory noises being made about cryptos, how Britain is not allowing the profits to be stored in British banks. And I believe the ECB is also saying that they need to be regulated. So you don't think that this will cause any major stumbling blocks for cryptos?
Well, bottom line, if I had any Bitcoin or Litecoin or anything like that, I wouldn't be looking to store it in a bank. I would be waiting, allowing it to grow in value until I can use it as money, because I don't need a bank to store my Bitcoin. Mm-hmm. That's the point. That with Bitcoin, the bank is your phone, right? As long as you can phone you and you have your passcodes, you don't need a bank to store the wealth, because to transact, why don't you just find somebody else that's using Bitcoin? I know that I've come across a number of users that would take Bitcoin for payment, right? So when that occurs, again, we end up with a decentralized banking system. This is why they hate it, because it takes them out of the equation, right? Think about the natural function of a bank is to ledger your money and guarantee that when you use your money at another place, it's being ledgered by them, so that it guarantees that it's your money. Well, why am I going to pay a banker to do that when Bitcoin does it electronically? It guarantees that it's my money. So it takes them out of the equation, right? And by default, it also takes government out of the equation, right? And that's why they hate it. But thank God or thank woman for Nakatomi Nakachaki, that's what his name is.
Satoshi Nakamoto.
Nakamoto, because it offers an exit, right, to those that see it, and a decentralized solution for the future.
Mm-hmm. Excellent, Jaime. Do you have anything else to add as we wrap up here? I think we've hit pretty much all of our topics here.
Well, I think that gold and silver are going much higher. Eventually, they're going to unpeg. I think that people should have a strategy that allows them to hedge themselves. So again, the concept of financial buoyancy. Keep in mind that what is really happening is that money is devaluing at a faster pace than the cost of living. So inflation is starting to come on side. That's going to accelerate. The next round of money printing has to occur to get this economy restarted. So that's not going to get better. It's going to get worse. And that's what the price of copper is signaling. So one of the errors that people are going to make, as a cautionary side note, I would like to point out that the best performing market over the last 2 years has been Venezuela. And that should really be an important signal to people, because it wasn't that the stock market was so hot in Venezuela. It was that people were just buying it to protect their money from devaluation. One of the concerns as well is that when people figure it out, it's no longer inflation, it's hyperinflation, because hyperinflation is a social effect of people making different monetary choices when they're running for the hills with their money and seeking the safety of Bitcoin, for example, right? When they get it. As more and more people get it, they change their patterns. Mm-hmm. And when people change their patterns, we end up with hyperinflation. So, I think that could be around the door. I don't know when, but it's definitely something that I'm hedging for. And it's definitely something that I'm going to benefit from. The other thing is that stock picking works. It proves. If you look at I'm going to do a posting, because as soon as I have my year-end numbers for the portfolio, I'm going to post it and compare it to the performance of those 3 benchmarks that I always follow back to the day I started at Canaccord, because now I have auditable third-party numbers for my portfolio. Since I left Scotia, I lost the performance numbers from December 1, 2015, when the portfolio was incepted. But it's double, right? So it is beating those benchmarks. It is offering financial buoyancy. And that's why it works, right? Clients are finally seeing it as well. After last year, they see what we're doing and how well we're benefiting from what's going on. In that, 2015, 2016, 2017, 2018, they were still dealing with the volatility of having the prices pushed down. But now we have too many profits anyway, so it doesn't matter. We're in a nice situation in that we're already on the other side of the chasm, and now we're working with profits, right? So we're buying things with profits, which is great, right? So anybody that's been in it for more than 2 years now sees it. My advice is start taking positions, buy right and sit tight. And as always, follow the yellow brick road. Those little nuggets of history were there for a purpose, so that we don't forget.
Excellent, Jaime. Where can our listeners find more about you and Canaccord?
Well, they can find me at Canaccord, actually, and just on a side note, the best firm, independent firm in Canada. Just the fact that they allowed me to speak is great, and they're doing great work in the precious metal side and great research. Also blockchain. They do follow blockchain. It's so nice to be working at an independent firm where you're allowed to think, right? And you can find me on my Twitter at IJ Carrasco, and on my LinkedIn, where I post on a regular basis my thoughts and my observations of what's going on. On that note, before we cut, I just want to say that I'm just observing and pointing out the things that I think are important to think about. Don't get mad at me if I point them out. That's all.
Absolutely.
Thanks for having me again. It was a pleasure chatting, and anytime.
Thank you, Jaime. This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.